Okay, so today we are going to go through the Acord 130, and this is the work comp application, and there's a lot I want to talk about. I'm going to try to keep it as concise as possible, but if you have questions, as usual, just send me an email. I'll answer them as we go through, and then I'll open it up for questions at the end. I'm going to start with the easy stuff, and we're just going to work on through this together. So, for starters, if I can get the date right. That's not a good sign here. Maybe I shouldn't have had this on a Friday. Okay. You can leave this section here blank if you're sending it into Access Plus. Otherwise, you'd put your agency's information here. We are going to put down the applicant's name. And we're just going to say this is an actual... I'm going to use HVAC as an example for this. HVAC. And we're going to say it's a corporation. Again, if it's an individual, you'd put Joe Smith, DBA, Joe's HVAC. The insured would be the person's name, but in this case it's a corporation, so we're just going to list out the actual entity. We do need an actual phone number. In fact, by we I mean the carriers. If you don't have a phone number, a lot of times the carriers can't process the quote because that's how they log it in their system. So I'm going to hit this box here right now because this is where everyone always forgets to put this, and that's years in business. This is a required field for carriers to proceed with a quote. So just make sure you don't skip this box that they hit amongst all these other boxes that you don't have to fill out. Years in business, they need to see that. Mailing address. Oops. And the reason why, of course, they have that is because it's an eligibility question as to whether or not they'd actually write the business. Oops. Alrighty. Okay. Now we're going to again put down whether it's a sole proprietor or corporation and that whole thing. So in this case it's a corporation, but you just mark that. And this is going to be a quote. We're always going to do direct bill, meaning the bill goes directly to the insured. Payment plan, I always like to put in monthly just to see if it's an option. And audit is important on work comp because they will audit about every single year. And you always want to choose at expiration. That way, when the policy renews, they get a little worksheet that they have to fill out. And just like taxes, if they had more payroll than they thought they would at the beginning of the year, they're going to owe more money to the company. But unlike taxes, they usually don't get money back. So it is important to be as accurate as possible without overshooting too much, but you do want to make sure it's pretty accurate in terms of how much payroll you say that they're going to have, so that way they don't get hit with a bill at the end of the year to make up for anything that they didn't estimate in the beginning. We'll talk more about that on the next page. Okay, location, this is just where their location is. I'm going to say that they have two locations. Okay, I'm going to say we have one at 123 Main Street. And I'm going to say we have another location. In fact, I'm just going to, because I want to get on the underwriter's good side, I'm going to say this is the servicing shop. Service shop. And then I'm going to say this one is the retail shop. Okay, so they like service and repair air conditioners and stuff here. They sell air conditioners here. Okay, and I would have explained that more on the 125, which is the general application. Okay, and again, you always fill out the Acord 125. We all know that by now. Proposed effective date, we're going to put down 4. I was going to put 4/1, which is probably more realistic with my time frames, but we'll say that I'm actually being a good producer today, and I'll put down that it's not due till 4/15. Oops, expiration's got to be 1 year later. Okay. Now, participating and non-participating. I'd encourage everyone to always check non-participating. And the reason why is because a participating program means that if they have a really good year, they don't have any losses, that they might get some money back. It's like a dividend plan, okay? But the problem is not all carriers have this. And so if you put down participating and the carrier doesn't have it available, they just sometimes won't give you a quote back. So I always choose non-participating to get all the quotes back I can, and then I ask on the good ones, do you have a participating plan? And then I can use that as an option if it looks good. Okay. Alrighty. Next, the limits. First of all, I guess we got to put down the states that we're going to be writing business in here. Now, this is an important section. There's two parts. I wish they wouldn't have thrown this in the middle. There's part 1, part 3. Okay. This is what states they currently work in, and we know for sure they're going to work in. These are the states that they may, on a very off chance, work in. So, for example, right now, we're going to say that we know they for sure work in Nebraska. And he's never ever done business before in Iowa, but he's close enough to Iowa he might do some business, and he said he might do some business in Iowa if he ever gets a job over there. He's just never had one. So what I'm going to do is I'm going to throw in Iowa in the other states. Now this doesn't get rated for as highly as this box, but you do need to have this here if there's a chance, because you'd hate for him not to be covered in a state that he maybe took a job in that was out of the ordinary. So any other states that he might do business in, you would put here, but any states that he's currently doing business in, you'd put here. So maybe if he's currently doing business in Kansas and Missouri, you'd put Kansas and Missouri here. Okay? And then he might do business in Iowa sometime. That's how that works. And that's just a rating feature and a coverage feature. If he starts doing work in Texas and it's not on here, he's going to be in trouble if he has a loss. So make sure you pop down all the states that are possible. Okay. Employer's liability. This is the actual coverage section. This is actually the limits of the insurance. Okay. At the very least, I would encourage everyone to put $500,000 each accident, $500,000 for the disease policy limit. There we go. And $500,000 for each employee. Okay. Now that just basically means if someone, chops their finger off or something, that's an accident. Okay. If someone develops like carpal tunnel or like asbestos poison or something like that, that's like a disease. And this is for the whole policy limit, and this is for each employee. Now, if you have some sort of an exposure, like maybe they're messing with chemicals or something, and there's like 10 employees, and all 10 of them are exposed to that, and it turns out because something the employer didn't do, like he didn't tell them that they needed to wear safety gloves, and all 10 employees get super sick with some bad thing because of this chemical that they're using, it's not going to take very long for that policy limit to get used up if it's only $500,000. So be sure to assess your risk. There's a lot of agents out there that don't know what they're doing, and you're quoting their business right now. You're getting their policies, and you're looking them over, and oh, they've got 100, 500 limits, or oh, they've got 500,000 limits on everything. I'll just match it, apples to apples. Well, you look at it and you're like, holy cow, these guys, there's a huge exposure here. You might want this to be 2 million across the board, and that is very, very reasonable in situations like that. So assess the risk and think about what's the worst thing that could happen, and then that's what you want to put the coverage at, because if the insurance doesn't cover it, it comes out of the owner's paycheck, basically. So they don't like you after that. So make sure you assess the limits of your work comp policies. And there's CIC classes, and I'd be happy to explain that more if anyone has any questions. Okay. Looking over here, we can skip all this stuff. Usually there's not a deductible. We talked about we're not going to have this dividend safety thing because we chose non-participating, and that's it. Let's work on down here. They do like to need a contact information if you don't have that on the 125, which you would, but I'm going to put this on here. Technically, you can send in, if it's standalone work comp, you cannot fill out an Acord 125, but you better be darn sure that you put everything in here, like the contact information, and then on the next page, like the remarks would be where you'd put the description of operations. I'm going to assume that we filled out the 125 going through the rest of this, so I'm going to leave this blank because, just like any producer, I don't want to fill out anything I don't have to. Okay, the office, we're going to say location 1. Let's say we've got an owner, Joe Smith, and he is the owner, and he owns 100% of the business, and he mostly resides at location 1. Now, here's where we get into the tricky part, and any of this stuff I left blank just means you can leave it blank. To include or exclude, that is the question. Okay, if you exclude the owner, which is what most policies do, that means that the owner does not have coverage if he gets injured during the course of his occupation on the work comp policy. Now you would think, as most owners, especially from the old school, think, well, I don't need work comp, I'm not going to sue myself, I'll just put it on my own health insurance. That's great. You just want to make sure that their health insurance covers them in the event of a loss. Because many health insurance companies now are putting an exclusion to save money, where the health insurance industry is going through all sorts of wacky changes, and there's no ISO forms in the health insurance industry. They all write their own policies. So there are some exclusions in some health insurance policies out there that state in there that coverage is excluded if it could be covered by work comp. Now, it doesn't say if it is covered by work comp, it means if it could be, meaning that if the person could get work comp coverage. And in this case, Joe perfectly could get work comp coverage. I'm just excluding him here. But he could very well be included, which means that his health insurance carrier would not cover him if he dropped an air conditioner on his foot or hurt his back or injured himself in his job. And if we all think about it, most of us work 10 hours a day. We're at work more than we're at home. Chances of us getting hurt at work are even higher than at home, unless you're as unhandy with the garden tools as I am. So basically, you will want to usually include them here, which is what I'm going to do. If he says that his policy he knows covers it, and if he's checked with his current agent, then you can exclude him, but you're going to want to get something like that in writing from him so it doesn't come back on your E&O. Obviously, he's going to sign this application, but that is just a very common dispute that happens nowadays, that these health insurance companies are getting real crazy. So I would just, at the very least, have them check with their current health insurance agent to make sure that that's not excluded. But for the course of this little series, and to protect Josh's backside, I'm going to put down included on the example. Okay. And then, if you are going to include them, you need to put down what the payroll is, and then we'll include it on the next page. So that's all there is to that. Next. Okay. The next page is the actual categories and description of duties. Let's go ahead and start up here. We're going to stay at the first location, which is where we talked about they do the service work. We are going to put down what they do here. So now, here again is where, here's another of these little tricks of the trade that you need to know that'll give you a competitive edge against the other agents out there. You could just put HVAC, but what that means is if there is more than one classification or class code for HVAC, they're going to automatically group it under the highest class code. So let's say we have 4 full-time employees, 1 part-time, and of course one of these would maybe include Joe Smith, because we included him on the last page, and let's say that the payroll is like $200,000. Okay. What this means is that whatever the highest class code is, the highest rate, that's where the company is going to throw in the $200,000. Now, if you know what the different class codes are and categories that you can use, then you can break this down, and as long as they keep their payrolls separate or keep track of their payrolls for the different duties that are being done so that they can report it at the end of the year, they have to have an accountant that does this, then you can actually separate these out. Okay, so let me go ahead and branch off on this a little bit. In order to find this information, what you have to do is you have to have some sort of a guide that tells you what the classifications are that are available for each particular industry. And this guide is called a scopes manual. Okay. Now you can get the paper version, but I recommend getting the online version because it's a lot easier to find things. I'm going to quickly show you what that looks like. Let me go on the other screen here. And in the meantime, I've got a question that came in here. Like, for example, what do you use for a location for someone who's on the road, like a traveling gutter installer person, or for example, a contractor that just works out of his house, you would just put location 1. And just like on the Accord 125, location 1 might even be just their home address, but you would actually just put location 1 for that, and you wouldn't have to obviously break it down. You wouldn't have to break it down by each place that they go work at. Just kind of like a point to tether them to, I guess. Okay, what I'm going to do here, I apologize, this is going to be a little tiny for some of you on your screens there. Let me zoom out here. Whoops. Okay. I apologize for the small print here. But what you're going to do is you're going to go, okay, so this, what I have here is an example of how you find this class code information. So I could go in, for example, to my little program here. This is Reference Connect. This is about $2,400 a year. You can actually subscribe to just Scopes, which is the actual work comp scopes manual, and that I think runs about $300 a year. But it's going to be similar to this. In fact, I'm just going to do something that I just recently looked up, which was someone was writing a church, and they needed to know how to classify the people that worked at the church. So what I did was I found where the churches were, and I think it was under, yeah, institutions, churches. And let's see here. I don't know why. Risk survey. I don't know why I went into the wrong thing. I apologize. Churches. Oh man. Wouldn't you know? I'm doing something wrong and I apologize. But basically what happens normally is I go in here, oh, that's why I went into risk surveys. I meant to go into risk profiles. Okay. I go in here and I choose the industry, and then what it'll do is it'll tell me the different types of class codes that are available for the work comp, and it'll give me a description of each different type of class code. So suggested work comp codes 8868 and 9101. If I go into 8868, it'll tell me that this class code is for like professional clergies. Now this class code is actually for college professors, but that's what it's telling me, is that that's the class code that you use for like pastors, is like it's the college professor class code. And NCCI is the National Council on Compensation Insurance. That's who specifies what class codes can and can't be used. So again, if you Google NCCI Scopes, S-C-O-P-E-S, like the mouthwash, Scopes manual, you'll be able to subscribe to this, and then you can see what class codes can be used. Now, this class code, 8868, is for the pastors. It's for professionals, okay? There was a person in there that was just kind of like a teacher's aide, and that person would have been classified under this 9101 class code. Now, 8868, the pastor or university professor class code there, that actually is a higher rated class code than like an aide. So you do want to break out the payrolls as best as you can if they keep the payrolls separate, so that way you can get the best rate. Because a lot of times what happens in the instance of this church, they had everything grouped under one class code, which was 8868 church. And so the whole payroll was going under that professional university professor payroll, which was higher than if they would have broken it down. So with our agent, we're actually breaking it down between the pastors and the aide. Okay. Now in this case, with our HVAC example, there are 3 class codes that you can use for an HVAC business. One of them is HVAC installation. One of them is HVAC service and repair. And then obviously if they have a clerical person, there's also a clerical code. Okay? And so if we wanted to save them gobs of money, probably half of what they would pay if everything was up here, actually more than half, what we would do is we'd say, let's just say that there's 2 people that do the installation, 2 people that do the service and repair, and 1 part-time person that does the clerical. So then we'd break it down more like this. Oh boy, we're going to test my math here, and this is probably not going to be good. Boom. You've probably saved them over 50% on their work comp just by properly classifying the payrolls. Now again, they have to be able to show this. If they have one or two people that do the same job, that's okay, as long as they keep some sort of a punch card or time clock, which most of these contractors do if they have any sort of a clerical person. Now, we also mentioned before that there was a second location that does sales. There you go. Second location, retail sales, 2 full-time, 1 part-time, and then the payroll, whatever the payroll is going to be. And again, this is estimating total payroll for all those people combined for that particular category for the upcoming year. Not what they made last year, but what they're estimating is going to be made this coming up year, because that's what they're going to get audited at the end of the year. Awesome. That was the main thing I wanted to make sure I got through, because this is where most agents that sell commercial lines, they lead with the work comp, because most people don't understand how work comp can be broken down into categories. And that $300 program, work comp scopes manual, oh geez, I couldn't write commercial lines without it, because I save people most of their money on the work comp by doing stuff like this. You just have to be careful. If you ever have a question and you're not really sure if you can break things down the way that you're thinking you can or not, because I've gotten too crafty sometimes at Audit, then they fix that for you, and unfortunately that usually means the customer pays more money. So if you ever have a question, NCCI just has a phone number that you can call and you can ask them, and they're the nicest government entity I've ever talked to. They're real friendly and they're really helpful, and so I always call and ask them questions, and they've helped me out a few times. So just so you know, that's how that whole thing works. There's one other little thing I'm going to talk about down here, which is the experience modification. We call it the experience mod. When you look at the person's current work comp deck pages, it's going to just probably say EXP MOD. exp mod. And what that is it's a number that they were given by NCCI based on their loss history. So if the insured had good losses, they might have a 0.9 experience mod, which means that whatever the work comp premium is, you take it times 0.9, and then that's the new premium. So if it was a $10,000 premium by the company, take it times 0.9, now all of a sudden their premium's $9,000. So obviously they get rewarded for good losses. Likewise, if they have bad losses, it might be 1.2. So then, the premium goes from $10,000 to $12,000. So this experience modifier is very important to put down here, because it's a huge rating factor, obviously. And the carriers won't look this up for you. You have to provide this if you're going to get a work comp quote. Now, it's going to be on the current deck pages of their policy if they have one. In order to get one, you have to have 3 years of experience, 3 years of work comp experience, and your premium has to be over $3,000. So if it's like a $2,000 work comp premium, don't worry about the experience mod and trying to find it, because it's not going to be on there. Okay. If it's on there, feel free to use whatever's on there. However, if they've had a work comp loss in the last year, go online and Google NCCI experience modifier, and you'll be able to pull the current experience modifier number, because it will have changed if they've had a loss. And it's important to have the most accurate one, otherwise your premium's going to be off and it'll get adjusted just after you write the policy. It does cost $35 to pull an experience modifier, so don't do it on a dinky little policy that they don't seem like they're going to close for you. Obviously, you shouldn't be working on those anyway. You should probably only be working on the ones that you should only work on the ones you know you're going to close. But in any case, that's how you get the experience modifier. Again, you can just Google NCCI experience modifier pull, and then it'll take you to that website, and then you can pull that. In order to pull an experience modifier, you do have to have an authorization form. So I'm going to go ahead and email that to everybody when I email this example, and you just have the insured sign it. I have them sign the loss run request form and the NCCI authorization form the first time I meet with a client. I just have them sign both those things, so that way I have them just in case I need to pull a mod for some reason because I find out they had a work comp loss. And that's all there is to that part. I'm going to scoot over to the next page real quick here. I'm going to open it up for questions. Obviously we need to put in losses. Oh boy. I'm not going to put that in. I'll just put one claim. Is there a reserve? Meaning, is the claim still open? No. Here's the nature of business description of operations if you didn't fill out the 125. Again, I'm not condoning it. I'm just saying you can get away with it. That's one way you can get away with. Well, usually I fill out the 125 though, because usually there's other stuff besides work comp. Now, if any of this stuff is yes, just put yes and fill out the box. But while I go through here and click no, I'm going to go ahead and open it up for questions. And if anybody has any questions on any of this other stuff, we'll go ahead and answer those now. Okay, sorry, a lot to fly through here in less than a half an hour. But did anybody have any questions about any of that stuff that we kind of went over? I'm just clicking no on all these, but obviously if any of them are yes, we'd put down Y. Just can't stress enough the handiness of a scopes manual. Even if you do get the book version, it's just really hard to write work comp without it, because you end up just going apples to apples and missing out on a lot of times where you could have really saved them maybe a lot of money, or properly classified things that maybe they're not properly classified for.